You know, it's very common in fourth quarter of any year that we start getting a lot of inquiries about selling a weight loss center. Whether it's a physician wanting to sell that part of their practice, or a chiropractor wanting to sell that part of their clinic, or a franchise investor in a weight loss franchise wanting to move on to something else. We probably get the most inquiries about that at the beginning of fourth quarter, and this has been a really big week for it. For a host of reasons. Now, why are people, first of all, we should ask, why are people thinking about it in fourth quarter? Well, part and parcel, it has to do with planning for next year. They're thinking, you know what, I know what I've made this year. I know what I've made over time. They're thinking about the highs, the lows, the struggles, the successes, and they're kind of weighing it out. And maybe they have, like a lot of savvy investors, they've just drawn a line and said, okay, regardless of the outcome, our investment strategy is to do this for X amount of years, or X amount of revenue, or X amount of profitability, sell that asset and move on to something else. Regardless of the reason, there are some things to consider when you are selling your location, as well as things to consider before you think about selling your location. So I want to walk you through some of the things that get in the way, and keep something in mind. We have been involved in the successful transition of ownership in excess of 200 weight loss operations, weight loss facilities across multiple brands. So here are some of the things that have worked well for people when they're selling their location. And it's important to understand this as you're monitoring and measuring and managing your existing business. These are good litmus tests to get some ideas. So if you wanted to sell your center today, what would it be worth? First and foremost, it has to do with pricing. Regardless of what you have involved in it, regardless of what you think it's worth, in the industry, it is only worth 2.5 to 3 times what you've made. Whatever your net earnings are, you can throw in their discretionary earnings as well. You may have drawn a salary of, I'm making numbers up here, of $100,000 a year, but then you had another $100,000 in discretionary expenses. So fundamentally, it's 200 times 3. So basically, your center's worth about $600,000. Now, there are 5 ways to calculate that number, depending on your tax situation. In fact, we have all 5 of those formulas, by the way. These are recognized formulas so that if a prospective buyer's attorney, accountant, wealth manager, anyone's looking at it, these 5 methodologies, these 5 formulas speak to wherever their head is. So first and foremost, you have to understand, no matter what you do, it's only worth 2.5 to 3 times what you made. Second of all, the second thing to consider is, for every piece of information you're missing, it's been our experience that you can just about knock off 5 and as much as 10% of the value of your business. As an example, if you are missing financial statements for any individual month at any point in the last 36 months, when you present your 3-year history and I wouldn't really do more than a 3-year history. For those of you that want to do a 5-year or some extended history, that's just paralysis from analysis. Do 3 years, and if they insist on having more, so be it. But a 3-year analysis of it, for every year or for every month you're missing or something's incomplete, knock off as much as 10% of the value of your business. The same thing holds for marketing material. So if you're missing 3 months of financials and 3 months of marketing data, that could be as much as 30% of the value of your business is knocked off. Now that's not a formula that is recognized by anyone. It's just been our experience that when the people that are guiding your prospective buyer, the professionals guiding them, are looking at this, they're saying, well, geez, they're missing 3 months of financials. Something bad must have happened. I'd offer them a lower amount. That's what ends up happening. Whether you agree with that or not, too sad, too bad, doesn't matter. That's just the way it is. So understand the value of your business and understand the need for having data. The next thing has to do with staffing. You can't keep this a secret from your staff. You got to let them know what's going on. But at the same time, offer them a bonus for time served through the new ownership transition. Something that you're either paying or the new buyer is paying. So that way there is a transitional team, because for whatever reason, employees are employees. The rank and file always think the same thing. If the center's being sold, I'm losing my job. That is not what's going on. In fact, it's been our experience, just the opposite is true. The new ownership will do just about anything to keep existing people. Hey, they want to have people on staff that know where the bodies are buried. They want to have someone on staff who knows every little thing that's going on, because there are varying degrees of training. The next thing you need to think about has to do with future liability. And that comes in a number of forms. First of all, the number one thing that gets sellers of a weight loss center in trouble are selling their center for beyond the 3-time value. Even if you can say, listen, we have made 8 times, this thing's worth 8 times, and here's what our earnings have been. And someone says, sure, I'll do that. I can almost guarantee you that 99 times out of 100, you will get sued. Whether it's a legitimate suit or not is not debatable. Getting sued is getting sued. You will get sued for either money to be returned or that you committed fraud, is what they'll argue. So if you price it beyond that 3-time value, you might as well just bank as much as half of the money you got, because odds are you're either giving it back in a refund or you're giving it back in legal fees, trying to keep the other half. The second thing you need to think about is, and this is exclusive to franchisees, and we're dealing with this with a small number of brands right now. There are a small number of brands that are in such a bad state, that are in such a state of disrepair, that it is not, in fact, they're wrestling with it right now. There are a number of people, it's part of the reason why they don't sell. If your brand is not selling new franchises, there's a reason for that. So if you're part of a brand that just is not selling new franchises, here's a good rule of thumb. If they're not selling new franchises, odds are they have a major, major problem. And if you sell your center to someone who becomes part of that franchise and later on realizes, hey, you knew full well the people running this show were complete idiots. There was a history of this problem or that problem, the other problem. Again, whether it's a legitimate lawsuit or not, you still have to pay to defend yourself. You run the risk of being sued by this person. And for that reason, we have some specific brands we have blacklisted that we refuse to participate in the transfer of ownership, because our office is afraid of being sued based on the information we know to be true about some of those brands. Now, what do you do about that? Well, here's what a lot of people have done. They've just basically sold the assets of their business to someone else, and that someone else then changed the name of it and brought in new diets, brought in new programs, and there was a separation there, and then they in turn flipped it later on. Somehow, some way, you got to find some legal way to de-identify, rebadge, no longer be part of that organization, and have a brand new standalone brand to be able to sell. It's unfortunate. But there's a handful of very storied brands where that is the very scenario, that's the very case. But a lot of them, the funny part is they're shooting themselves in the foot. They've made it so nearly impossible for anyone to buy an existing center that by default those people get rejected anyway. So keep those things in mind. There's only so much you can get for your business. You need to make sure you have the proper documentation. Keep your staff in play, and if you're a franchisee, get some ideas to what your corporate office, take the temperature as to what is going on with your corporate office. Are they in a stagnated mode, or are they in a period of decline? And you may want to take another strategy. Like I said, there are some brands we have blacklisted. We will not deal with under any circumstances in this regard. There are others that we're more than happy to help with. If you need some guidance for your weight loss operation, whether you're a physician, a chiropractor, or a franchise investor, we are intelliFRAN. We're the only company that does this kind of work. And we can provide you with guidance, potentially. Only about a third of the people we talk to, we are able to form a really solid partnership with. The other 2/3 either don't need us or have unreasonable expectations. See if we would be a good fit for to be a partnership with your business. Now's the time to be thinking about 2018. The window on your success for next year closes in the next 60 to 90 days, and you want to make sure you have all of your ducks in a row and you're ready to really tackle what could be, from our chair, probably one of the biggest years for the weight loss industry since prior to the recession. So we're very excited about the prospects for next year. Have a great day.